Today's video is brought to you by Evolve ETFs.
Canada's financial sector is one of resilience. It is also the perfect setting for some income generation. Fasten your seatbelts, folks. This is going to be a good one. So what makes the Canadian financial sector so good? Well, it is made up of some very impressive blue chip banks like Royal Bank, TD Bank, and of course Scotiabank. In addition to our big banks, it also has some of the biggest insurance companies like Manulife Financial, Sun Life Financial, and Great West Life Co. These institutions consistently deliver strong earnings, benefit from diversified revenue streams, and distribute reliable dividends, making them core holdings for income-focused investors. The stability of this sector is very attractive to investors for sure. However, that is a lot of companies, and bundling them together into a single exchange-traded fund or ETF sure does make a lot of sense for some serious sector diversification. Using an ETF is a great approach for sure, but what if you are an income investor? No doubt you would have an appreciation for the diversification, but when it comes to income, you may be looking for a little bit more. That is where Evolve's Bank ETF comes in. This fund was designed with income in mind. The Bank ETF uses an active covered call strategy to help amplify returns. This means they sell call options on up to 33% of Bank's portfolio, which then allows them to collect option premiums or fees for the buyer who takes those options contracts. These premiums will then add to the overall yield the fund is able to pay out. Covered calls is only one part of the overall enhancement. Bank will also utilize up to 25% leverage to further magnify their returns. Leverage allows them to borrow additional capital to increase their exposure to the underlying stocks by up to an additional 25%. This will further add to the dividend income. I do need to point out, when using covered calls, they do add additional risk. Also, they can lose some upside potential in strong bull markets, which may not be a huge concern if you are using this fund for pure income generation. Also, be aware that leverage will cause more overall volatility, as the ETF's value will move a little more than the underlying holdings because of that leveraged capital. Thanks to the use of covered calls and leverage, Evolve's Bank ETF aims to maximize income while still benefiting from Canada's, the resilient financial sector. A sub to the channel is your best strategy for future content. When it comes to understanding the economic currents surrounding this ETF, we need to look at the sector and how the current economy is interacting with it. Banks are expected to face a large renewal wave of mortgages at higher interest rates, as these are those mortgages taken out during the pandemic when the rates were sub 2 and 3%. This is, of course, expected to create a lot of financial pressure for the banks. However, the banks have set aside sizable reserves for loan loss provisioning and at the same time continue to report strong earnings and revenue growth. They have navigated the renewal wave very well thus far. Other factors like tariffs could add additional strain to the sector. And while the banks are also taking that into consideration when they are setting money aside for additional loan loss provisions. Overall, the sector is taking a cautious and smart approach to the current economic currents, and they will more than likely emerge on the other side just fine. Now, bringing the focus back to income generation, a slow-growing or stagnant economy can work in favor of a covered call strategy. In volatile or sideways markets, stock prices tend to fluctuate within a range rather than experiencing strong upward trends. This does allow covered call ETFs like Bank to consistently collect option premiums without sacrificing a lot of that upside potential that you see in a strong bull market. With all of that being said, I think it is time we get into a few fundamentals. Of course, with numbers involved, we need to call on the prophet of profits, the baron of balance sheets, the one and only Mr. Math. We will begin, as usual, with a little bit of their surface data. Their NAV coming in at $7.33 as at April 9th, 2025. Those fund total net assets, they're totaling up to $377.502 million. Now, as per Yahoo Finance, as at April 9th, 2025, Their average volume, that's coming in at a nice looking 249,995. As I mentioned before, bank does employ covered calls, and they will write on up to 33% of their portfolio. And of course, this fund does use leverage up to 25%. I like what I am seeing here. Let's dive a little deeper and look at some of the fund specifics. We will start with their management fee. That comes in at 0.60% as at June 30th, 2024. When it comes to their holdings, they do hold an equal weighting of Canadian financial companies. Let's take a look as at April 9th, 2025. We have Great-West Lifeco coming in with 11.41%, Power Corps Canada coming in at 11.25%, TD Bank 10.19%, Manulife Financial, love that company, 10.02%, Sun Life Financial 9.84%, Royal Bank 9.71%, Bank of Montreal 9.52%, CIBC 9.46%, Scotiabank coming in at 9.37%, and bringing up the rear, National Bank 9.29%. Keep in mind, these are balanced quarterly. I do like this portfolio a lot. These are some of my favorite companies for sure. Okay, let's turn that page one more time and take a look at their returns. They have a very nice dividend. The trailing 12-month yield as at March 31st, 2025 is coming in at 16.23%. That's not too shabby at all. Switching to their returns, we're using data as at March 31st, 2025. Their 3-year performance, that's coming in at 8.00%. Their 1-year performance, 20.89%. Holy banana bread. That's a nice number for sure. We also have their performance since inception on February 1st, 2022, which is 5.99% as at March 31st, 2025. I do like these returns, and I have no doubt the income investors are really liking that dividend quite a bit. Okay, I think it is time for that final verdict. Evolve has made a very good income ETF with bank, and I have no doubt that the income investors are going to love this one for sure. The Canadian financial sector will have its fair share of struggles through the coming years, but it is a strong and very resilient sector, and that's going to bode well for this ETF. In fact, some of the struggles could be beneficial to income generation, so that's also a plus as well. If you are a dividend growth investor, you may initially want to pass on this one, but if you are looking to add a little income to your portfolio, bank could be worth a second look. If you are interested in bank, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on eBit. Thank you for watching, and I will see you in the next video.
Today's video is brought to you by Evolve ETFs.